Mark E. McCarron's with us, CFA Partner Chief Investment Officer at Westcott Financial Advisory Group, and Joanne Bianco, Investment Strategist, Client Portfolio Manager at Bond Blocks. Thank you both for being with us. Before I get to more on the markets, Mark, I just was curious how you thought about the interpretation of this print.
Yeah, thanks. The news, like you just mentioned, came out a little lighter, or a little softer than expected. I sort of put in the context of the dual mandate of the Fed. So the first is to keep full employment, and the other inflation goals. This is a good suggestion that the market is moving toward a less inflationary environment, and disinflation is happening, and we've seen weak unemployment as well. So you've got that combination, I think, supporting the fact that the Fed is likely to cut rates in September.
Yeah, understood. Joanne, what did you make of it?
Very similar comments. Definitely, it was a welcome thing to see that it came in lower than forecast, indicating an ongoing moderation in inflationary pressures, and also that the categories that are used to calculate core PCE, which is released later in the month, were generally tame, the categories in the PPI. So that's good news as well.
Yeah. How do we now, based on the uncertainty of the election, but a little more certainty that inflation's going in the right direction? Bostic alluded to that. Raphael Bostic talked about that they want to make sure the inflation trend is real, but the cut is coming, just it may be a little further back. It also made you feel like there was less worries about a recession, which that was spooking the market a bit. Joanne, how do you go about a bond portfolio or portfolio overall? I mean, how are you feeling?
We think it's still a very good time to increase exposure to fixed income. There's a lot of opportunities. We are recommending to clients to actually, our top pick continues to be in credit. We like corporate credit, particularly triple Bs in investment grade, and we like high yield for the extra income that you can get amid still resilient economic conditions. In treasuries, we're also recommending that clients move out the curve to the intermediate part of the curve, because we think that there's the potential for better total return opportunities by doing so.
Thank you for that. A brief moment, we saw the 10-year back to 4% over the last few days. We've been watching that, the VIX, the market volatility. And Mark, something you noted was the rate-sensitive sectors, and you're keeping an eye on certain sectors, small caps, real estate, bonds. Tell me what you think could work going forward.
Yeah, I think we saw a little glimpse of what happened a couple weeks ago when the Fed indicated that they might be cutting rates. And that does offer, I think, an opportunity for portfolios to broaden out a little bit. Small companies, real estate, bonds, all of which are interest rate sensitive, benefit from declining borrowing rates. So I think that's a positive overall. And we're looking at the front end of the yield curve, if you will, because that we think is more influenced by the Fed policy. We've seen, yes, the 10-year drop below 4%, but we've seen the 2-year drop almost 1% from where it was just at the end of May. So that big move at the front of the yield curve, I think, supports a fairly conservative but also high-yielding bond portfolio.
Yeah, surprised to see, today, 386 on the 10-year mark.
Yeah, it's a big move. And yes, it's been a volatile bond market. So we saw the volatility, obviously, last week in the Japanese stock market and the effects in the U.S. stock market. A lot of that has come back, but we've seen volatility in the bond markets as well, as really the investors trying to figure out exactly when this rate cut will happen. I think with news today, the CPI print tomorrow, and the retail sales, I think all of which may support that further easing and cooling inflation. That's a positive.
Yeah, and just quickly to reiterate, Joanne, you talked about what to move out of, but buying U.S. high yield exposure on weakness was one of your ideas that you were talking about, and prioritizing income. Some final quick thoughts?
Yeah, no, I think that, we're all eyes are on CPI being released tomorrow, and the market's hoping for numbers that are, showing enough progress so that no one will want to second guess the likelihood of a September rate cut, but still high enough to push aside recession concerns. So kind of like the Goldilocks of CPIs.
What about tomorrow? What if the market sells off tomorrow? Mark, what are you going to do if there's this big sell-off tomorrow?
Well, I would imagine the big sell-off might be because the CPI number doesn't come down as much as possible, and you might see a reversal in the bond market. We're long-term investors. Obviously, one day, one print doesn't make a trend. We do see the long-term easing of the inflationary picture as a positive, and I think that allows the Fed to start normalizing their policy rate here as we move into a slower, more moderate economy.
Yeah, great to see you both. Just dropped to 385. Thank you both so much. With the Dow up right now, 367 points. Mark, McCarron, Joanne Bianco.